This is an audio recording of the LendIt Fintech Weekly News Show. The show is streamed live on LendIt TV, LinkedIn, YouTube, and Twitter at 5 p.m. Eastern Time every Thursday. In this fast-paced show, the LendIt News team and a special guest discuss the most important fintech news stories of the past week. Good afternoon, everybody, and welcome to the LendIt Fintech Weekly News Show. My name is Peter Renton, Chairman and Co-founder of LendIt Fintech, joined as always by my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm good, Peter. How are you?
Doing great. And for the first time, we have Jonah Crane with the Claros Group. How are you doing, Jonah?
I'm doing well. Hi, Peter. Hi, Todd.
Why don't you just give the listeners and the viewers just a quick 20-second background about yourself?
Sure. So I'm a partner at the Claros Group. We're a slightly more than 2-year-old advisory and investment firm working on the future of finance. We're sort of focused on the combination of regulatory and business advisory work.
All right. Well, let's kick it off with the first story, which has certainly a regulatory bent to it. BlockFi, which we've had Zach Prince speak many times at LendIt and known him from his Orchard days, but he is now the CEO and co-founder of one of the leading crypto marketplaces for lending and investing. And he settled with the SEC and state regulators and paying $50 million to the SEC, $50 million to various states, so that he will now be allowed to have his product will be deemed legal. At least that's the hope anyway. So, he's going to have to basically, he's discontinuing like no one can put any money into the current product. They're going to go through a registration process. The same product, as far as I can tell, is actually going to be relaunched in a new way, but with all the things you do when you have a security, registration statements and what have you. But it's like BlockFi. I saw Zach was on with Bloomberg this week with Emily Chang and lauding this as a great landmark for crypto. But what do you guys think?
Yeah, look, I think obviously they are going to make the most of this, and I think if the SEC and state regulators are going to insist that products structured this way be registered as securities and be offered through, at least in this case, sort of an investment fund, then they're going to do that. And I think, BlockFi is in a position to be able to do that, right? This is a company, they are sort of centralized in the lingo, more so than some of the companies operating these kinds of products in the DeFi space. And so I think they'll be able to do it, and in that sense have a bit of a first mover advantage. I mean, one thing I think about when I sit here is, both from the regulator side and from the industry side, is this not a result we could have achieved like a year or two ago, and maybe $100 million ago, with a little bit more interaction or engagement? And I don't know the details here, but it feels to me like something that maybe could have been avoided.
It feels like both sides have kind of antagonized each other a little bit at times. Some of the crypto companies kind of either bad mouthing or talking negatively about regulators, and regulators, not interacting with or being as proactive maybe with crypto companies. It feels like they've kind of clashed each other. As you said, they could have gotten to this result a while back, and we could be in a lot better place now, but at least, I guess you could say, at least they got there.
Yeah, and I mean, there's certainly been some criticism in the crypto community that the SEC keeps moving the goalposts, and I don't know. I don't know whether it was Coinbase or someone went to Washington and the SEC refused to meet with them, and you don't know the full story, but clearly, I think this could have been realized a long time ago, and it could have saved everybody a lot of hassle and expense. Anyway, let's move on. I want to talk about the Super Bowl because this is it was a lot of fun. It was a great game, and the ads were very crypto centric. We had Coinbase, Crypto.com, FTX, eToro. Coinbase, I saw the QR code ad come on, and I said, "Hey, Jude, my son, grab your phone and scan that." and I had a feeling it was a crypto company. And Coinbase said 20 million people scanned their QR code in 60 seconds. It was 60 seconds on the screen there, and caused their website to crash. Obviously, that was, I'm guessing, higher than their projections. But
that was 20%, or a little under 20% of the audience, which is about 112 million.
Yeah, I mean that's a
huge number,
massive number. And so I think they achieved their goal of being talked about and being, I read somewhere this week that if they get 44,000 people to sign up to Coinbase on average, they will make their money back off all the expense, which is 44,000 out of 20 million. Feels like that's pretty doable.
I think the thing I find most interesting is that, while they came out around the same time with Bitcoin white paper in 2008, but really fintech has been the more popular term, at least in the industry, for about double the amount of time that crypto has been. But if you ask anyone on the street, fintech, they probably won't know it. But if you say crypto, they'll at least know Bitcoin or something like that.
Yep.
And so it's interesting how much it's jumped in the last few years, how crypto's just jumped to the top, even though it's probably considered a subset of fintech. No one knows fintech the way that they know crypto. And it goes to show you how popular and how much people have, kind of at least taken some level of interest in it.
Mm-hmm. Yeah, I think I saw a survey recently that said something like 24% of people in response to the survey said somebody in their family or in their household, owns some crypto. So it's very clear that is taking off, and it's seeping into the broader consciousness and almost sort of part of the culture, right? And you're seeing ads at the Super Bowl, and one of the sort of apex cultural moments in the U.S. NFTs have obviously crept into various parts of the media and entertainment landscape as well. So it's having something of a cultural moment as well as a financial moment. I think Peter, the stat you threw out that if they get 44,000 new signups, they'll make their money. But that implies to me a relatively high lifetime value on that.
Yeah, well, exactly. It's expensive to be on Coinbase, right?
Yeah, but I think that says something about where we're at in the evolution of the crypto space and why you saw 3 big crypto exchanges with big splashy ads in the Super Bowl, and that is that trading is still a scale game. Exchanges are still a scale game, and while the margins are still really high for crypto trading, everybody has suspected for a long time that those are going to come down in the long run. We've all been wrong to date. We'll see what happens in the future, but I think they're all making a play for scale because they know at the end of the day that's going to matter. Right.
And it's interesting. They're all a lot of them are gravitating towards sports. I mean, crypto.com, we've had endless Matt Damon ads. We talked about him on the show multiple times that they, at least they didn't have at least they had LeBron James this time and not Matt Damon. That was a nice.
I was at the Knicks game last night, and the bottom of the basket, like the padding, says Coinbase on it.
Huh.
It's everywhere.
They're everywhere, and they're taking over sports.
Everywhere. Well, the Knicks should be paying them to put their logo on.
After blowing a 28-point lead last night.
Yes. Okay. Let's move on. I want to talk about another regulatory issue that came. Article in American Banker this week. I was unaware of this victory in California that fintech scored, and it's maybe a hollow victory insofar as it may not last very long. But but this is we still have debate over true lender and valid when made, and basically my understanding was that the court judge in California said that what the challenge to that system is we're going to keep the way we have it, which is and there's been a lot of talk. I mean, we had the letter from we talked about last week that from the advocacy groups, basically naming names and saying, these are predatory loans. And anyway, I'd love to get Jonah, your take on this. I'm sure you've been following this particular episode. It's been going really since the Madden ruling was that like 2014 or 2015? But it's seems like we can never get finality on this issue.
Yeah, we had the Madden case, then we had true lender cases being brought in the settlement in Colorado, which provided some clarity at least for certain players in certain jurisdictions. And I was unaware of this particular case until the decision came down, but I think it more or less solidifies, at least for the time being, as you say, the status quo. I think the letter to the regulators, obviously, sort of notable, and I think trying to capitalize on the fact that you now have sort of three pretty progressive Democrats running the show at the FDIC, who is the primary federal regulator for most of the partner banks who are in this space. And this is obviously a very long-standing, long-running set of issues. The consumer groups have been focused on it for a very long time. In fact, going back well over a decade. And I don't know that the regulators are going to come back here and try, through rulemaking or otherwise, to really sort of shut down the partner banking landscape for high cost lenders or otherwise. I don't know what tools they really have available to them, but they do have supervisory tools, and they've used those in the past. If you go back to the days when I think the rent-to-charter term was coined, when there was concern about banks sort of fronting for payday lenders, they used supervisory tools and pressure at the time. And so you could see some of that. I suspect it'll be focused on the sort of high interest end of the spectrum. But it does come within a broader context of concern about bank fintech partnerships and whether banks are adequately managing their risks. So that's definitely hanging out there.
Mm-hmm.
I don't have much to add. It just feels like it's a never-ending story.
Well, if one day we're going to get final clarity. The trouble is, you're going to get new administrations, you get new people in who have different ideas, so it may never be fully resolved. But let's move on. Want to talk about the metaverse. Exciting news this week. JPMorgan opened the first bank to have a presence in the metaverse. They chose Decentraland. There's multiple metaverses right now. They basically, I saw, Ron Shevlin basically created an avatar and joined and walked around the JPMorgan branch, or whatever you want to call it, location in the metaverse. I know we've got someone out in there. Should be an article coming out maybe even tomorrow, because one of our team members also joined and wandered around JPMorgan. Can't really do much yet. There's a picture of Jamie Dimon. They got a tiger, which is pretty cool, I guess. A tiger that's just wandering around the foyer. You can do those sorts of things in the metaverse. It's a fascinating thing. Ron Shevlin's piece in Forbes today was talking about really the big opportunity is lending, because property prices rose from an average of $100 to $15,000 in 2021 on Decentraland. So there's clearly some money changing hands there.
I wonder, not only with the metaverse, but other new things that are coming out, I wonder if you'll see more banks trying to jump in early, thinking that, all right, we might have missed the early trend in crypto. Like the next thing, will we, even if metaverse, fizzles out, and the next thing that comes, will you see more banks kind of just jump in? Granted, Peter, you said, hey, JPMorgan, you essentially can do nothing, and there's a tiger walking around, but they're in there. And so we wrote a story on it. Someone else wrote a story on it. Does that give them this potential in for the future? All right, they were first. I don't know, but I think it's interesting that they jumped in already.
Yeah, it seems like a nice branding play for now, right?
Yeah.
I mean, you can show that you're sort of hip and with it a little bit. I read about a law firm that bought, an office space in, I guess it was the other metaverse. And so, I guess
Sandbox or something it's called.
Yeah, Sandbox. So, I guess you can't hire lawyers and have bankers in the same metaverse yet. Maybe someday. The real question is, I think, and this is, very much TBD, sort of what do people want to do in the metaverse, right? Because nobody's going to wake up and say, I'm going to go into the metaverse to visit the JPMorgan branch and do some financial transactions. We don't do that in real life. And I doubt we'll do it in the metaverse. So the question is, what do people want to do? And do we need banks to facilitate that? And the sort of funny thing about it is I thought the whole point was to sort of embed the economics of these worlds within the within those worlds to begin with, and it wasn't, So I again, we'll just have to see what people want to do in the metaverse and what role there is for traditional financial institutions there.
Right. I saw another article this week that said something like a $1 trillion opportunity that is what they, it might have even been JPMorgan said that's what they believe within the next decade the metaverse is going to be a huge opportunity. We don't know, but I think it's hard to imagine what use cases will come out of it. I think no one thought that we would be doing what we do on smartphones today when we first invented the cell phone. So it's, I feel like
maybe Steve Jobs, but
maybe Steve Jobs, yes. But and that's what they'll be. I think like is Zuckerberg this visionary, or is just no one going to hang out in the metaverse? It's going to be like Second Life and eventually just kind of fade away.
Right. But there's still 1 million people on Second Life, as far as I know.
Oh, there is? Okay. You never hear about it anymore. I mean, they really should own the metaverse. They were the first ones.
They were there.
Anyway, let's move on. I want to talk about Discover. I thought this was a really interesting development that I read about this week. They're basically partnering with a company called BuyIt Mobility, and so Discover merchants are going to be able to take ACH transfers through their merchant account at Discover instead of having to have someone pay by credit card. They can pay by ACH transfer. Discover's an investor in this company, and the thing is, there are already cases where you go to a gas station, there's a cash price and a credit card price, and there's going to be like this in between price for doing ACH, and it already happens today apparently that you can save significantly if you're just using ACH bank transfers instead of credit cards, but I thought it was pretty interesting.
Didn't Plaid and Marqeta partner doing something similar?
I think you might be right, Todd.
Yeah, it was sometime in the last couple of days. I forget the exact article. I think I read it in maybe Crowdfund Insider, but it's very similar, which is they partnered on ACH payments as well.
Okay.
Yeah, and Plaid had an announcement out not too long ago with some other partners that they're working on building instant ACH out, and they're working down that volcano diagram that surfaced in the Visa antitrust litigation, right? We'll have to see again. I think you hit on the key thing, Peter, which is are those incentives that are going to be offered to consumers to use it enough to break the loyalty rewards habit? It's there's sort of the holy trinity of the issuers and the networks and the rewards habits on the part of the consumers. And I think Discover's got its own network essentially, and they're an issuer, so I think they're reasonably well placed, and perhaps they're looking around and saying, hey, if we're going to get disrupted, well, maybe we'll do this disrupting. Perhaps it's irony. I don't know. I believe this is the same company that helped Walmart build out MCX a while back, which was similar, at least in its goals. So we'll see if this one gets more legs. I think there are a lot of people taking a look at this, and people have asked whether PayPal and Square are going to be doing similar things within their own sort of closed loop networks. And so definitely something to keep our eye on.
Yeah, there's so much movement in the payment space right now, and different initiatives. There's so much innovation. You can pay with crypto now by using certain cards, and I feel like gone are the days when you're going to have a checkout. I mean, it already are. You go to checkout now, and you can go to a major store and you see sometimes 6 or 8 different ways you can check out. It's quite
it's like strange. Does it eventually get to the point where there's like 30 options to pay?
I don't think
and how onerous is that for the consumer? It's like right now it's like, all right, Affirm, PayPal, credit card, debit card, and then all of a sudden it's like, all right, pick from this list of 100. So at some point there'll be some kind of, I guess, consolidation or at least consensus on here are the options.
Yep. Okay, let's move on. I want to talk about Circle. Circle is the operator of the USDC stablecoin, which has, I saw it was just over $50 billion of value now locked up in that stablecoin. They announced a SPAC deal last year at $4.5 billion, and now they've gone and renegotiated that, and it's $9 billion. So same SPAC sponsor, which was from the CEO of Barclays. It's his SPAC, and interesting. They say, well, when they first signed the deal, there was like less than half the amount of assets locked up in USDC, and now it's more than doubled. So they're in a better position, and clearly the SPAC sponsor has agreed that, yep, you are worth $9 billion now, which is quite staggering.
Yeah, it's a big deal, and it's obviously sort of bucks the recent trend, both with respect to sort of fintech stock valuations in general, SPACs in particular. So you've seen a handful of broken SPACs. Acorns shut off their deal, and I think eToro might be delayed. Apex, I think, also canceled their deal. So, SPAC fintech deals have been a dicey proposition. I think only one from last year was up. I think that was
right.
Dave, and everybody else is down. So I think it's quite notable when somebody bucks the trend. I think Pagaya recently doubled the size of their pipe, and their SPAC I think is still trading in the money, and the Circle SPAC is still trading in money. So maybe those deals will get done, but it's a pretty notable signal amidst the carnage everywhere else.
Yeah.
I remember, what was it, this time last year, SPACs were as hot as they've been probably ever. Right. And we were mentioning probably 2 or 3 SPAC deals almost every news show.
Yep. We were. It was literally SPAC bingo there for a while, and
times have changed.
Yeah. Yep. Well, it always felt like
out there. There are 400 SPACs still out there, in theory, looking for deals. So I think we're seeing the fallout from that.
Yeah. They're not all going to find deals. There's no way. Anyway, I want to talk about a company I don't know we've ever talked about on the show, MoneyGram, but MoneyGram.
The only time I think we talked about them was I believe they did a deal with Ripple.
Oh, I think you're right. They did. Yeah. We probably talked about them then, but yeah, they've kind of been left behind a little bit with all of like Western Union are the biggest player in the remittances space, and there's a lot of fintechs now chomping at the bit to take their business. But anyway, MoneyGram, they're a publicly traded company. They're now going to go private. The deal, like they were worth, I think it was slightly under $1 billion. Now it's going to be the deal they're going private for $1.8 billion. They have 150 million customers. I read that's a decent customer base, but clearly they haven't innovated. And I remember the one thing I remember that was Ant Financial tried to buy them back in 2018. I think it was like $1.2 billion, but the US government said no. That's you're not going to do that. So they are they're going to become a private company, and who knows? I presume this is a PE firm. I don't know how they're going to innovate, but there's clearly, I feel like, MoneyGram have a great customer base. They just got to provide products that people want. That there needs to be a technology component here.
Yeah, no question. I think this was a really interesting one to me. Partly because of the buyer, partly because of the valuation. I think it seems like a really low price to pay for a company that has 150 million customers, and with footprint and regulatory licenses all around the world, it feels like there's an awful lot you can do with that. And as you say, got to bring the technology component to it, given where the world is, not just heading, but has headed. There's a cautionary tale here. I think MoneyGram got in lots of trouble for money laundering and fraud issues about a decade ago, and it took them, a good 8 years to resolve those issues. And I think that's probably weighed on their ability to, really grow and do much of interest with the business. So it'll be interesting to see what a private equity shop does with it. I would have frankly expected, if not a public company, maybe even one of the larger private payments companies to buy a company like this and see what they could do with it. So I was a little surprised by this.
I think they've been rumored to I don't know if rumored is the right word, but I think I've seen other potential deals that they've done with crypto related companies. And so it's, there also might be, for the PE firm, that angle to it where they have these potential partnerships or do have partnerships. Don't quote me on whether or not they have them. I believe they do have some. That, you know, it might be a wider play than just MoneyGram and the 150 million customers, but, you know, there's potential other connections there in the crypto world where, you know, I know that they've started to at least play and interact.
Yeah. And I would have thought, like to Jonah's point, that, you know, a company like Revolut would want to go and acquire 150 million customers. They're a digital bank making big waves in, you know, they're trying to get the US-Mexico border in Europe. They made the name for themselves with, you know, foreign exchange and sending remittances and that sort of thing. But, you know, obviously,
you know, Wise, Nubank. I
Yep.
mean, these companies that are looking to, you know, not necessarily come to the US, but, you know, they've mastered one emerging market, and so to speak, and, you know, MoneyGram's everywhere. Yeah.
I just wonder how much brand equity they have with those 150 million, because clearly,
I don't know
if they were on the market. Sure, fintech companies looked at them. Anyway, so the last story I want to talk about today, I thought was super interesting and kind of fun as well. The New York Stock Exchange has put an application in with the Patent and Trademark Office for a marketplace for cryptos and NFTs. And so, you know, the New York Stock Exchange, you know, they're a venerable firm that I don't know how old they are. They're a very old firm down there in downtown Manhattan. And, you know, they minted NFTs to some of the IPOs. They did like a minting of like 6 different NFTs last year. So clearly they're kind of playing around in the space. They say they have no immediate plans to launch anything, but I can't imagine you'd put in a trademark application for a, you know, crypto trading marketplace and a NFT trading marketplace if you weren't serious about it.
Yeah, I mean, I don't know, you know, how specific those plans are necessarily, other than maybe just seeing, hey, there's a lot of activity there and a lot of money flooding into it. I think in some ways it's sort of notable that a firm of that vintage is moving this quickly to try and get into the space. So I think that's interesting and notable. We'll have to see what they think, where they think their angle is, but you know, and whether the interest and sort of activity in the NFT space continues.
Yeah, I feel like the OpenSea are valued at $13.3 billion in their last round. The revenue they've generated from zero to I think it's over $1 billion in revenue that they generated in short order, because they've almost had a monopoly on the NFT space. But I mean, it all depends. If you're bullish on NFTs, this is a brilliant move, because the NYSE doesn't want to be left behind. And I'm bullish on NFTs. I think it's going to be a monstrous play. And I don't know if there's any marketplace in the world that has the cachet of the New York Stock Exchange. People still want to go public there. You got the facade that's, all the columns, they put the banners up there. It's a beautiful building. And I think, they can leverage that into other areas. And that's clearly what they're trying to do, right?
Yeah. Well,
I'd be curious how
Sorry.
I was going to say, I'd be curious how the dynamic plays out with those enthusiasts when a player like this gets in the space, and then it's kind of, you have OpenSea, which is, crypto native company. And then you have one of the NYSE come in. Are the traditional financial firms or those players do NFTs via the NYSE, or do they go to OpenSea, or, how does that dynamic play out over time and do they ever gain a real traction, or do people see it as, this is old finance trying to get into new finance? I'm just going to OpenSea because they've always done this and this is what they specialize in.
Mm-hmm.
Yeah, it's a good question. And maybe the play for NYSE has to be when, get to sort of the next wave of adoption for people who, didn't start with OpenSea and are now just looking for a place to do it that looks a little more recognizable. And, maybe NYSE will buy a buttonwood tree in the metaverse, and then they'll have their outpost.
Right. Well, keep in mind, you've got Coinbase launching an NFT marketplace. You've got I just had blockchain.com. I interviewed them on my podcast this week. It'll be out in a couple of weeks. They're launching an NFT marketplace. I mean, and there's going to be multiple. And I think, the NYSE has as good a shot as anybody of making it. Because again, most people who are going to get into NFTs are not going to be crypto native. They're going to come in 2 years' time, in 3 years' time, and they won't have any necessary allegiance to OpenSea. I see it being a really wide open market. Anyway, we are out of time. Thank you, Jonah. Thank you, Todd. Thank you, the listeners and viewers. Really appreciate your time. Before we go, want to remind you, LendIt Fintech USA is happening May 25th and 26th. It is going to be the biggest fintech event of the year in New York City. It's going to be in person. We can't wait. And go to lendit.com to find out more. Anyway, thanks, guys. Have a great weekend.
Thanks, Peter. Thanks, Jonah.
Cheers.